This is something that we want to explore before we hand things over to Bloomberg Business Week Daily. Kaylee, where are we at? $66 West Texas Intermediate, 66.5 now. This is a 2% move today. And of course, we were talking about plumbing the depths of prices with oil just weeks ago. This march to a potential strike once again against Iran has changed the game. And we wanted to ask Mike McGlone about the latest here. Bloomberg Intelligence senior commodity strategist has been a bear on oil. Mike, is this going to end up being the peak for the year, depending on when this story finally breaks, whether it's a strike or not?
So, Joe, how did you know what I was thinking? I think that's more likely the case. We've had a bear market bounce. You don't run to sell bear markets in the hole. Now, 55 was a low for the year. Right now, we're pushing new highs in the year, but it's right around last year's mean. Last year's high was 80. And the consistent trend in crude oil is anytime you get these bounces on potential supply disruption events in the Middle East, it puts in peaks. The Western-dominated producers sell forward, and prices go back downward. So I think all traders now are looking for is how high the space can it be, and when can they reset some of their hedges to increase that supply surplus on the Western Hemisphere.
Well, so when we think about that supply surplus, McGlone, is there the extra capacity in other like OPEC producing countries to offset any supply concerns, knowing that one of the scenarios we're gaming out here is potentially that some of those Gulf states actually can't get that excess capacity out if the Strait of Hormuz is blocked by Iran? Is that not a different factor this time around?
Well, welcome back, Haley. And that's the typical reason people use for prices to go up is some kind of blockage of the Strait of Hormuz, which hurts one country the most, Iran. So I don't think it's going to hurt too much. And we all know our president has cozied up to most, certainly Saudi Arabia, but a lot of the Middle Eastern producers. We know he can bring that supply on right away. He's showed what he's willing to do to get prices lower by kind of taking over Venezuela. And what really matters for the midterms, lower prices, I think he's going to get it.
So save an interruption. And we do have this conversation. You're right, Mike, every time. And journalists who don't know as much as you do start writing stories about this because everybody's an expert when we go to war. Save an actual disruption, including the closure of the strait. Is there spare capacity elsewhere to make the difference? Oh,
sure, absolutely. Saudi Arabia can come bring back more. They start to curtail a little bit out of OPEC. But the bottom line,
so we could have a protracted military operation and it doesn't actually send prices higher than where we are.
Exactly. Initially, it'll be about, okay, is there going to be an immediate supply disruption? We'll judge that. And if not, it might just accelerate the pre-existing terms. But having traded through the Gulf War, I just remember the peak kicked in right when the invasion started, even before we really knew. So if there's not a swift resolution to whatever might happen, that's a problem. But right now, this is just adding to that bear market sensitivity. How long can we stay at these high prices? Often what happens typically takes a little spike, cleanse the shorts, and then you go back down.
Mike, just quickly, as you mentioned, President Trump's desire to get oil prices lower and how you think that might be connected to the action we've seen in Venezuela. What role does Venezuelan oil play in the market now? What influence does it have?
Well, Kaylee, it's part of that shift to the Western Hemisphere from Canada down to Argentina. Just U.S. and Canada alone, our net liquid fuel and crude oil exports are running 8 million barrels a day. To put that in context, when crude oil peaked at 145, we were importing about 11 million barrels a day. So it's just shifting that focus. Venezuela is adding to that trend of more supply from Canada, the U.S., Brazil, Argentina, Guyana. You see the trend there? So it's also, it's kind of made a statement. A lot of that Venezuelan oil went to Cuba, and now they're getting cut off. So this is putting narrowing down Iran and China and Russia in their connections.
All right. Bloomberg Intelligence commodity strategist Mike McGlone down in Miami, Florida. Thank you so much for joining us.